But what do you think would happen? Let's just play devil's advocate for a moment, okay? What do you think would happen if you got that position in your learning, that plateau of now you're bored. You know what it's going to do. You know how it's going to deliver. You just got to wait around for it to happen. And then when it presents itself, you push the button and it does what you thought it was going to do. And the results were expected and it was delivered as such. What do you think happens when you start applying gaming theory and money management to something like that? When you're no longer emotionally stimulated by the result, but you're now pushing the envelope with high precision, high strike rate, high accuracy, and now you have optimal F applied to your risk management. You start seeing extrapolated increases in your equity, and you still don't have the emotions. You don't have the fear. You don't have any of that stuff. And when you place that against something other than what's normal in this industry, it rips it to shreds. Nothing comes close to that. It's breakneck velocity in terms of the equity increases. And contests are not even a contest. It's a clinic. Here's what you'll never be like. Here's what you'll never be able to obtain doing the Mickey Mouse shit you use. But you can't jump into that. You can't just jump into that league. There's a lot of things you have to do to prepare yourself. You have to completely desensitize yourself to the ebb and flow of your equity going up and down in a trade. And I talked about that today when we were live streaming. The reason why I've talked to you in these live streams the way I do and in these Twitter spaces, because I want you to remember these discussions. Because when you're in a live trade, and some of you probably have never been in a really profitable winning live trade with real money. When it happens, and if you're not sitting with a trade that has a limit order where you know where it's going to go, you got in, you don't know what it's going to do, you're just giving it a chance to start moving around, and it explodes in your favor out of blind luck. I say that facetiously, obviously, because if you're using what I'm teaching, it won't be blind luck. But it'll explode in your favor. And then you have this problem. It's running. Profits building constantly. And you're looking at it like a deer in headlights. You can't move. You're paralyzed, and you're watching the candle expand bigger and bigger and bigger, and the profits growing faster and faster and faster. And you don't want to touch the stop loss, but you don't want to close the trade, but you're thinking, I should close the trade because I'm making so much money. What happens if it reverses? And it still keeps climbing. It still keeps building up, and you're all hopped up. And it feels like panic. That's one of the hardest positions to be in as a trader that's new, because everything you do is going to be wrong. If you get out right now and it rips even more, you're wrong. If you don't get out and it retraces or reverses, you're wrong. If you stay in that position with no limit target placed and you don't trail your stop loss to lock in something, you're wrong. And that's what's happening at 100 miles an hour in your mind. All these things are zooming through, and you can't focus on any one thing. All of a sudden you have attention deficit disorder. You didn't have it before, but you have it now, buddy. And it's a weird feeling when you encounter that. It's like, what the hell do I do? What do I do? And if your spouse is in the room, they start talking to you. Shut up! Don't talk to me right now. Look, don't you understand how hard this is? I told you, I gotta be focusing. Now, minutes ago, you're reading the fucking comic books, eating potato chips, clipping your fucking toenails. But now, because you're in this position where everything's flying at light speed, you're not losing money, you're making money. You have no idea what to do with it. And here's your spouse just saying hello to you, and you're tearing their fucking face off. Because that's one more thing that's competing for your attention, because you didn't do what you're supposed to do. Have your model outlined. Where's your profit targets? Where's your partials? You have to be prepared for those types of things. And it's going to happen. You're going to just get in there one day and just see, this looks like it might move. Let me put it in here and not put your limit order in, not put a partial in. Let's just see what happens. And boom, NASA, rocket takes off. Boom, it's off to the races. And then when it happens, you don't know what you're not supposed to, you won't know what you're supposed to be doing because it'll be moving too fast. And I guarantee you, whatever you do that moment, you're going to regret it later on. I wish I would have got out sooner. I wish I would have held on to it longer. I wish I would have moved my stop loss up more. I wish I just would have just sat still. And you're going to be flipping through all those decisions so fast. So fast. And you're going to be panicked. And I'm holding these discussions with you because I want you to remember these things. When you're watching price, using the things I'm teaching, you're not going to be surprised. You're not going to have these, where'd that come from? Why did it happen? Why did that happen? Let me go on Twitter, ask everybody else, dude, what just happened? You don't ever hear me saying that. My students don't ever hear me saying that. In any of the mentoring I've ever done over live streaming, when I was mentoring behind the paywall, they never were like, whoa, nope. We were anticipating everything. That's a different mindset. That's the truth. When you're here with us, we're training you to be a soldier that's war hardened. We know what we're walking into. We know bodies are going to be stacking up, and we're doing the stacking. We know that someone's losing their ass, and it's on the other side of our trade. We know our setup is coming, what time of the day it's coming. We know how it's going to form. We're waiting to ambush it. We know how to stalk our prey. We are not ambushed. We are not taken by surprise. We're not caught in a snare. We know exactly where we're placing our next step. We know the terrain. We've been here before. It's well mapped out. That's confidence. And to someone that's new, that's never been around us before, it sounds like fucking arrogance. And guess what? If you want to call it arrogance, fine, I'll own that. It's just me being around the block enough times to know I know my way around. And my students do too. It doesn't make us pieces of shit. It doesn't make us bad people. It just means that we know our shit. We know what we're doing. And these funded accounts in these companies, they're finding out. They're finding out we are built differently here. This is the Monster Lab. Okay. This is Monsters Incorporated. You come in here, you spend enough time, you're coming out a savage. Claws, fangs, everything. And you're going for your pound of flesh. And damn it, you're going home with that pound of flesh. When you have these opportunities to sit down and watch live price action with me, I want you to feel what it was like before you had these experiences where you were looking at the price action and just felt like, what am I supposed to do with all this? I'm tickled, honestly. When I read comments after the live stream, it's like, dude, what the hell? Like, it did everything you said it was going to do. Right. Now, I don't feel that way, but I'm amused when I see new students or people that's never spent time with us. Their reaction to that, I love that. I take the Twitters or tweets rather, and I show my sons, I say, look at this. This is someone now. Right now, I have my hooks in them. They're never, ever, ever going to forget this. In that moment, they're going to hold on to that. And they're going to want to do it themselves. They're going to do whatever it is. They learn how to do that themselves because they see it as a superpower. And it is. We're fucking mutants here, man. We're not like the average traders. We look at things with a precision perspective, discipline. We know what we're waiting for. We're not distracted. We're not taken by surprise. We're not looking at stupid shit that has nothing to do with what makes price go up and down. We're not worrying about fundamentals, because fundamentally, everything's in the technicals. Period. Like, what else do you want? What else do you need? Think about it. When you first started trading or got interested in trading, everything that you put your hands on, you know that the stuff that you were looking at just didn't make any damn sense. Like, yeah, I see what you're saying with these lines and stuff, doing this and doing that, but how do you know it's going to go there? Well, we really don't know. You just got to, eat it if it's wrong. No. I know what I'm looking to eat. It's fucking filet mignon. I'm pulling it off of somebody's ass in this market. They're going to lose to me. I know that going in every day. I know how to find that next victim in the marketplace. I know that. And you're being trained to do that too. And when you see everything else next to what it is that we do, nothing compares to it. It gives you confidence. It gives you clarity. You know what you're looking for. Think about it. You know exactly what you're looking for. It's going to run up to that liquidity, or it's going to run up into what? An inefficiency. How do you know if it's going to go to buy side or an inefficiency, Michael? How do you do that? Like, how do you know that? Has it ran up above buy side recently and then broke down, but has yet to take out sell side into a discount? Then it's probably going to go up into an inefficiency, a premium, and not run that high. It's already ran the stops. That's how I trust it. They've already went into the liquidity. Now they're just taking it into a premium to rebalance an inefficiency and then send it to the sell side and then reverse the other way if you're bullish. It's going down for inefficiency or it's going down for sell side. It's going up for inefficiency or it's going up for buy side. If it ain't doing that, it's consolidation. Think about it, folks. You got three choices: up, down, or sideways. If it's sideways, well, the calendar is going to tell you when that's going to happen. When do we expect consolidations? I taught you that. So if it's not around those times, then we anticipate expansion. Which side of the market are we going to expand on? Which side is likely to be traded to because it's been taken into sell side or buy side? The market's going to move to the opposite range. Why? Because smart money's going to want to do offset distribution. If they're short because they've taken buy side, it's going to go down to a discount to inefficiency or sell side. Reverse it. See, it sounds complicated because you haven't been spending enough time with us. That's all. You haven't been watching price action. You haven't been seeing me outline it real time, telling you what it's going to do, why it's going to do it, what it isn't going to do, when it's supposed to do it. When you spend time in that environment, live over real-time data with me, it's easily to convince you there. But you're still going to, at the end of the day, walk away from the live stream thinking, wow, that was amazing sorcery. That was a magic trick. He's doing something. Nobody can do this. And then you start thinking about how you can't do that yet. You're impressed. You don't know quite how I did it, but you go right back to thinking, let me turn it against myself. Can I do that right now? Which is unrealistic. But then you start feeling bad, like, this is really complicated. I want to see that in my own trading. I want to be able to do what Michael and his students are doing, but I can't do it right now. But I've watched 6 videos. I've been watching these videos. I've binge watched for the last 3 weeks, and I've put some things down on a notepad. I don't know where the notepad really is, and I spilled coffee on it. And what do you expect from me? Organization, yes. Diligence, consistently showing up and taking it like a business. If you're just going to be willy-nilly with it, then that's what you're going to get out of it. You're going to get what you put into this. If you treat it like you're learning the highest form of financial warfare, you're going to handle yourself differently. If you're thinking this is like the lottery and it's scratch-offs, well, come on. Of course, you're going to get Instagram results. It's amazing when you finally get to the point that you can do these things yourself. But all of the interviews I'm doing, and I have lots more of them. Got another one I'm recording tomorrow, but it probably won't be up until Monday. Why not? Why not, ICT? I want to space them out a little bit. It sounds like I'm filling my channel with just that. I got to put some teaching videos in between them. But when you have this epiphany, this moment of clarity where you know what it is that I'm training you to observe. When you finally get to that point where it makes perfect sense and you know exactly what you're looking for in price action without me having to say so, I cannot find words to fully articulate the level of fucking power and confidence that it gives you. And I'm sorry, I know some of you like the language. Listen, man, ma'am. We're talking about life-changing shit here. You can play Sunday school once you learn how to do it. You want to carry yourself differently? Sometimes I can't carry myself 100% stable. I go off the rails, and I'm fighting very, very hard to stay on them right now. But when I feel what it felt like for me, and I know it's going to have the same impact on you, probably even worse, not worse in a bad way, but more impactful, because you didn't go through 6 years of it. Some of you are just coming here, and in a short span of time, you're already learning things that you were not aware that was even possible. I guarantee you, if I did a poll and you were being honest, not to try to fluff me out, because I don't want any of you doing that, but if I was to ask, how many of you are astonished to see that it is possible for someone to be able to call every minor fluctuation in the marketplace with that level of degree of precision? It was unfathomable in the beginning. Before you found me and anything like the things I'm teaching, you didn't think that was possible. I know I didn't. I just felt that there was people out there that would get more luckier than I was getting luckier on the few winning trades I had as a new student in the 20s. Or not, when I was in my 20s, rather. And it's weird when you think about all of the things that you wrestle with in the beginning. Will I be able to do this? How long will it take me? Everybody wants to ask the person that's teaching them, how long do you think it's going to take before I start making money? Well, if that's the first question you're worrying about, it's going to be a lot longer than you want it to be, because you're making it about the money. When if you just simply say, I want to get good at reading price action, and I want to be desensitized to where I believe it's going to go, and I'm submitting to whatever it does, that's a person that's going to make a lot of fucking money. That's a person that's going to be so consistent, and they're not going to be swayed by any little fluctuation in the marketplace that might scare everyone else. I mentioned it today live. I said, look at this big green candle here. Some of you are like, oh, I'm getting nervous. It's going to reverse. No, it's going to go lower. It's going to go lower. It did. And that's what it's like when you have experience. You want to see these up close candles when the market's going lower, because you want to see price repel away from it. That's a bearish order block. You want to see the middle of that up close candle hold price down. That's the mean threshold. And when you start seeing it go up into that level and just fail to go any higher, it hits like this invisible force field where it will not let it go past it. Iron Dome, baby. Nothing gets through this. It stops right here. When you see that, when you're watching that in price action, that's immediate feedback that you're on side. That means you're right. That means you're right in your direction. So stay with the idea. But if you start seeing premium arrays when you're bearish and 3 of them fail, bearish order block, mean threshold breaks. It trades above a short-term high where buy side is, and then goes through a fair value gap above that. Well, you probably reversed and you missed it. So now you got to make the decision. Do you abort it right there, or do you wait for a small little retracement in your favor and get out? That's experience. In the beginning, as soon as you see 3 fail, kill it, abort it. Don't even waste any time. I walked you through how the dollar index went up into 3 premium arrays I outlined. I talked about it before it happened. So I was taking your attention there. I told you, go into your own chart. And I felt sorry for some of you because I know you're new. And I went into the chart and showed you where that was. But I also outlined how we were going lower, and then another low in ES. But almost getting to that new week opening gap low. At the same time, it went into 3 premium arrays on the dollar index. Time of day, we're going into that 3 o'clock hour. Well, you saw that shoots up. Not surprised. Why? Because it's doing something that's symmetrical. Dollar index went up into 3 premium arrays. ES went down into the new week opening gap, high, new week opening gap, consequent encroachment. And we're in the lower quadrant of that new week opening gap. At the same time, dollar has dug into its buy side liquidity. It went through that liquidity void where there's an actual gap yesterday evening when it started trading again. And the buy side liquidity at the 45 level or something to that effect. 0.45, 10245, I think it was. It went through all 3 of them rather. And now we went to what? Time. So things are going to happen around certain times of the day. So you're constantly balancing what you're reading, interpreting from price delivery, and other markets that are important. So if the dollar's going up, that's what? That's risk off. It's going up to what? Into liquidity. 3 premium arrays was traded into. And then we did that at a time of day where it can do what? Price in the daily range extreme, high or low. What's it been doing since the afternoon? Trading lower. It went completely down through the opening range gap and through it, taking out the low of yesterday. Now we're trading at 3 o'clock. Final hour trading. We've already made a run below the low yesterday. So what's it likely to do? Draw back on those individuals that have been doing what? Making money. That's what a macro does. It rolls against whoever's been profitable right now. Or it completes a higher time frame array. So in other words, if the morning session is rolling higher, the macro will spool, send price up into the higher time frame array. 950, 1010, 1050, 1110. That's it. Simple. But you don't understand what simple means because you're new at what we're doing here. So that's the reason why I tell everyone to learn how to do this, you have to give me a year. And then you will see a full calendar year. You'll see the seasonal impacts that causes these major fluctuations, or what I call a quarterly shift, where we have major macro changes in the tide of direction and price action. And then you find what that is and you try to get in sync with that and you mine that. You try to work within that. So in other words, if we're looking at a quarterly shift, in other words, we're looking at 2 to 3 months of price movement on a daily chart and weekly chart to a higher time frame array, higher or lower. If we identify what we're in, bearish or bullish, you're going to really try to focus in on the weeks that are likely to expand on that weekly candle in that quarterly shifts direction. So we're going from a higher time frame to a lower time frame with the context of a quarterly shift, seasonal tendency, weekly range expansion in the direction of that seasonal tendency. That's when you're going to do the highest leverage. Whatever your maximum leverage is, those are those instances where you do that. You don't want to do it if your analysis on the higher time frame, weekly and daily, saying that we're bearish for the next 2 to 3 months. We're expecting prices to gravitate lower. Okay. You may do your analysis and say, okay, well, we've been going down for a little bit, and now this weekly candle could expand higher. You don't want to do your largest leverage or risk the most that you would normally do as a high-end leverage in that instance, because you're going against your quarterly shift in the seasonal tendency. So you're not gambling. You're taking the trade, but you're limiting your exposure to risk based on your higher time frame macro analysis. And all these things come together. And then when you have the market finish its expansion against the quarterly shift, whatever your seasonal tendency is, for the next 2 to 3 months analysis, that's weekly and daily chart driven. Then if you have something that's going to expand on the weekly chart that's in that same direction of the higher time frame monthly and weekly chart, now you're in the movement or expectation of that quarterly shift being bearish. Now you're expecting the next week, when you're doing analysis on Sunday or Saturday before the market opens up, you're expecting that weekly candle to expand lower. What are you going to do in those instances? You're going to use potentially your largest leverage, or do what? Pyramid. When don't you pyramid ICT? When it goes against the higher time frame order flow or a quarterly shift. Then I just do simple get in, do my position, get out. Be done with it. You don't want to push violently with your equity trying to increase it when it's going against the macro order flow. This 2 to 3 month higher time frame seasonal tendency that we were trying to discern. If you know that you're going against that, why would you risk more? Why would you push your account? Because the chances of it delivering is what? Not as high and with low resistance as it would be if you were in a 2 to 3 month higher time frame bearish market. You're expecting seasonal tendencies to send it lower, and then waiting for the next weekly candle that you are likely to see it expand lower. So therefore you're trying to go short. Everything is framing a idea that you're trying to build a position going short with everything in your favor going down. Then you can do pyramiding. Then you can build your positions larger, and you can hold on to those positions longer and not take partials so quickly or that much off as your first partial. See how there's a graduated understanding that all these things come together, and it's a beautiful tapestry, but you can't learn it all just because I sit down with you and spend hours. There's a lot of other things that have to be understood. And that's what I mean when I say you can't have these expectations sitting down like that young man in the parable of the Jade Master. Yes, it's not a true story, but I love that story because it teaches that when a student thinks they're ready and they go to someone that is equipped to teach them, they go there with the expectation that they know how to be taught. They know how to be trained or taught how to do it. So who's the master there? They're pretending to be the master, but the master knows that this is how everybody comes to the master. This is how it is. You come to the instructor thinking that you know how you're supposed to be taught and trained. No, don't teach me this. This is how I want you to teach me. How do you know the benefits of that? If you don't know something, how can you say, teach me it this way? Makes no sense. That's a person that's not in a position to be trained. They're unteachable at that moment. And that's what those exercises and those drills that the Jade Master puts that young man through. Makes him do chores, talks to him about things that are outside the topic of Jade. I'm doing the same thing many times in these lectures because I'm teaching you to do what? Build discipline. Build patience. You're learning everything you are here to learn. I'm not wasting your time, but I'm also fortifying your understanding. I'm presenting things that you're going to lean on when you start pushing real buttons. And when you get in those real thick moments of, oh boy, I'm really in it now. What are you going to remember? You're going to remember all these discussions. My voice is going to pop in your head and it's going to be like, oh shit, that makes sense now. He talked about this. This is what I'm supposed to do. I remember he said this is what usually happens. So just submit to this idea and let's see what happens. Instead of, oh man, what am I supposed to do? The analogy earlier, where you get into a trade, you don't have a profit target put in, and it blows up in your favor, and you don't know what to do. That's a terrible feeling. It's a good problem to have, don't get me wrong, but it's a terrible feeling because you're making money and you're frozen in confusion, panic, and bewilderment. Like you don't know what to do. How unfortunate. How unfortunate for an individual to end up in that condition. And yet it happens many times.